U.S. Consumer Price Index slowed faster than expected in the month of June. Now, expectations are high that the Federal Reserve may make its final rate hike in July. Our Seung-jae has more.
As the U.S. Consumer Price Index slowed faster than expected in June, expectations are growing that the end is near for U.S. Federal Reserve interest rate hikes. According to U.S. Department of Labor on Wednesday, June CPI rose 3.0% from the same month last year, slightly below the market forecast of 3.1%. The latest figures show that the country's inflation had shrank by a third since the June 2022 CPI showed a 9.1% rise compared to the same month the previous year. The June core CPI, which excludes volatile food and energy prices, rose 4.8% from a year ago, but was again below the market consensus of 5%. While some believe that the faster-than-expected slowdown in the country's inflation means that the U.S. Central Bank will impose a final hike in July instead of the 2 more rate hikes this year that policymakers have previously hinted, others are more cautious. They say that because core CPI is still in the 4% range, which is twice the U.S. Fed's target of 2%, the central bank could go ahead with 2 more rate hikes this year. Still, investors seem to be optimistic over the latest CPI figures as U.S. stocks and treasuries rallied while the U.S. dollar tumbled. Wall Street's benchmark S&P 500 stock index on Wednesday closed 0.7% higher, marking its highest level since April 2022, while the tech-heavy Nasdaq rose 1.2% on the day. Traders expect the U.S. Fed to pause its rate hike after a 25 basis point rate hike in July, putting the country's key interest rate in the 5.25 to 5.5% range. Seung-jae, Arirang News.